Hello traders, it's Samurai Trader here. Welcome to this training session, how to day trade using the overlay chart. So basically the overlay chart is very simply where we take a number of the indicators from our anchor chart 1 and overlay them in or on your entry chart in a lower window. Now it's no better or no worse than say using your standard anchor chart 1 chart or standard entry chart. However, it does allow you to see most of the information that you require on the one chart. So what I'm going to do is just show you some live trading I took today, and actually it was a little more accidental that I started to trade live. So I've recorded a little, which I'll show you as well, and we'll look at some other potential setups. We'll go back and perhaps look at the setups over a few hours as well. So this PowerPoint and the recording will be in the members area. So first of all, understanding the risks, you know the drill. You can always pause the recording to read the disclaimer. So traders, you need to be checking regularly, and I know I bring this up in virtually every video. Why? Because they're critical. We need to know where our pivot levels are, where our prior days open, high, low and close levels are, where our 89 and 200 EMAs. In fact, they nearly gave me, or they were giving me grief when I was trading on the overlay chart today. In fact, that they weren't ideal setups, but I'll explain that when I get to the charts, and a couple of things perhaps that I'd recommend that you don't do and you actually wait for. Also, we want to know where intraday swing highs and lows are. I've got a great example of a trade or potential trades there as well, and of course where our current day's high and low are. So the indicators that we actually use now, first of all, I do have a PowerPoint of a session I recorded some time ago on how to overlay another time frame in NT8. Now I'm not sure about other trading platforms, so if you just simply Google it or go to a members forum for that particular trading platform, you'll generally find everything you need is there. So what I've got here is the settings from that video, so you'll find the link to the video and this PowerPoint also in the same overlay folder with this PowerPoint and the link as well. Okay, now I'm running this is unscripted, by the way, so if I seem to hesitate for a moment or I'm thinking about what I say next, it's because I don't have a script anyway. Okay, so what do we want to actually do, and we'll see this in when we get to the chart itself. So ideally I want to overlay a 2-period RSI. Now you still may use the 5-period short-term stochastic that we'd normally use on a chart. However, the 2-period RSI to me is cleaner because it'll give me straight lines rather than the short-term stochastic from the anchor chart 1 on the overlay chart can be a bit wavy and a little more jagged in no man's land particularly. So I do prefer the 2 RSI, and it turns at exactly the same spot as the 5-period short-term stochastic. I also want to overlay the long-term stochastic from my anchor chart 1. So we're using the exact same settings, by the way, we would have on an anchor chart 1, except they're in a lower window. And I like the 30-period hull, which is the 30 HMA. Now it's like a triple smoothed moving average, but instead of a hull or even the long-term stochastic, you might even use the anchor chart 121 EMA. If you have an EMA that changes color with the trend, on NinjaTrader it's called, one of the versions I have is the slope indicator. Well, it can just help you identify also the trend direction of the 21 EMA. So you've got a couple of options that you've got here, but these are the 3 that I'd normally use. Now one of the biggest questions, or one of the most often asked questions is, when will the 2-period RSI or the short-term stochastic hook out of the overbought or oversold zones? triggering a potential trade, because we're trading the higher time frame. For an example, down here, this is what's happening on the anchor chart. Now note here that this white line in this case is the 2-period RSI. It's down. It does not hook until now, which is in this case on the high of the 4th candle. Sometimes, depending on the time frame you're trading, it might be the 5th or even the 6th candle. So with these hooks that you have, they will vary depending on the time frame, but I'll show you in a moment how you know exactly when they're going to hook. Well, actually it's right here. In most cases, the anchor chart, when the anchor chart 1 candle closes, you'll have the 2-period RSI or the short-term stochastic hook at that same time. So ideally, if and some of your best trades are going to be when you're overbought or oversold with your RSI or your short-term stochastic, and when they hook out of those overbought oversold zones, you're generally going to find you've got a rule of 1 on your anchor chart 1, and by using the bar status indicator on the anchor chart 1, or looking at that on a separate chart, or even having it off to the side, that will tell you where to put in a buy or sell stop order, and I'll show you that when we get to the charts. Now very basically, to confirm an entry chart setup, does the anchor chart 1 short-term stochastic confirm the trade direction? In other words, has the short-term stochastic hooked or is already trending in the direction of the anchor chart 1? You may find that the short-term stochastic or the RSI are already well and truly overbought, and you can scalp in the direction of that overbought, oversold short-term stochastic or even RSI. In fact, I'm just going to drop that in right there because something I'd missed. I really should have put that in. Now, does the anchor chart 1, and all of this of course is better displayed on the charts in a moment, does the anchor chart 1 long-term stochastic confirm the trade direction? So ideally we want to see the anchor chart 1 long-term stochastic confirm the trade direction. In fact, you'll see that in a couple of minutes. I took a 89 EMA break. That's what I call them. When I trade above the 89, or from the break of the 89 up to the 200, or it can be reversed of course. I mean, say if I have a reversal, and I might sell when price gets under or thereabouts the 89 EMA down to the 200 EMA. Now in the case of the trade I took today, both the long-term stochastic, the hull and the RSI, of course all three were trending in the direction of the trade, and I jumped in and took the trade. I hadn't, and it was actually quite some time since I'd actually had a retracement, so it was actually a higher risk trade, but I had all of these three trending in my trade direction. Better if I show you when we get to the charts. So bottom line is, to confirm the EC trade setup, does the anchor chart 1 RSI short-term stochastic confirm the trade direction for long-term stochastic and the hull? Now if you don't use the overlay chart, you're looking for basically exactly the same thing on your anchor chart 1. So let's have a look at 3 examples. Now in this particular case, we'd broken out of a range here, we'd rallied up, and just there we had a potential trade. We had a potential trade just here. Now in this case, see how we were oversold, we then hooked. Now we probably wouldn't have hooked until up here somewhere. Likewise just here, the 2-period RSI came down, hooked back up probably somewhere around here. But what I wanted to point out was this: price then rallied up, and we then went into a trading range. So in this case, this is the 6E, the euro dollar, and so the anchor chart 1 down here is a 4 tick. So our standard setting of 2 and anchor chart setting of 4. What this shows me here is that whilst we're in chop here and we had a few other potential trades set up, we would have been stopped on both of those. Note the 2-period RSI was actually down. It did not hook back up in the overall direction of the trend until here. So by waiting for the 2-period RSI to hook back up, it kept us out of 2 losing trades. Now I'll have you notice here, see the triangle there, the little triangle there, there's one there, there's one there, there's one here. This is and did I point that one? We got one out, we got one over here. This is actually set up by the 5-period short-term stochastic. I've simply hidden the short-term stochastic plotting in between the 80-20 zone, and so you can't see that there. And what you'll notice is, see how we turn with the 2-period RSI at the same spot. So they're identical, 2 total different indicators doing the same thing. So what we're effectively looking for is for the short-term stochastic to hook ideally if we've got the long-term stochastic, and this is not ideal, but we can see right here we are in an area of chop. And when I say chop, you've got the 200 EMA sideways, you've got the 89. It is a higher risk area. Now note there, we're actually bouncing off the prior day's close, so we may have even taken that trade and it would have been good for a few ticks. But the key point here is, traders, it would have kept you out of a couple of losing trades by waiting for the 2-period RSI to hook back up again. Now in this particular case here, we had a hook just here, we had one over here. Now this is your standard 3B just here anyway. So price pulled back, we can see there the 2-period RSI pulled back. Up here we rallied up, it pulled back there, it hooked. Now it wouldn't have hooked till, gee whiz, probably about the 4th or the 5th candle anyway. Then you had a bounce here. Now this was either a 34B or a 2B. Now remember, that would not have hooked until about here. Now if you had have entered that trade as a 34B just there using a rule of 1, you would have been stopped on that trade. But I'll have you note down here, you did not have or you wouldn't have had the 2-period RSI hooking at that stage. It would not have hooked until over here. So once again, by waiting for the 2-period RSI on your anchor chart 1 to be trending in the direction of your trade, it kept you out of another losing trade. Now up here we had a potential short. Now over here what we can see is the short-term stochastic, 2-period RSI, let me get this right, did not hook until around here. Would have kept you out of that one. Now what that actually means is you wouldn't have been in that anyway, because remember, when we take a reversal trade, we are waiting for the anchor chart 1 candle to close. So if we were for whatever reason considering taking this as a divergence trade, you would have found that the anchor chart 1 candle didn't close until about here. Okay, so about your standard 4th or 5th candle. And by the way, you then had a T10, and then finally we roll back over. You then have a bit of a reversal just there. So look for the anchor chart 1 long-term stochastic 30 HMA and 2 RSI to be fully overbought, oversold. The reason I put that there, that can be a really good indication of a potential reversal. So when you're in the 80-20 zone and you've got your long-term stochastic for 30-period hull and the 2 RSI and you get a hook, you may very well be heading towards a reversal. See over here, it was trending up, but it wasn't overbought, or they weren't overbought. Wasn't till over here. Just one more. So what we've got here is I've just labeled or marked up where exactly the hook would have appeared on your anchor chart 1. So it wasn't until here that you would have had your anchor chart 1 candle actually close. So not there, but here. And so just there. So I've gone back and just marked up every one of these exactly where the anchor chart 1 candle would have closed, getting you in to these potential trades. Okay, so we're waiting for the anchor chart 1 candle to close. With the AC1 short-term stochastic, you would have entered most of these on the close, in this case on this time frame, on the close of the 6th candle. Very easy for you to calculate, traders, as we're about to see. So let's go to the charts now. So what I would do is either have on display to the right there your anchor chart 1, where you could see the bar status indicator, which you can't see just here right now. Now of course, if you've got multiple screens, it'd be great to have this fully expanded and just to be able to look at another screen where you can actually see the bar status indicator. Why? Because if we're looking at shorting just here, we can see that the 30 period hull is oversold. That red and blue line is the long-term stochastic, is also oversold. And on or about the close of the 4th candle, we finally had the short-term stochastic hook. So what you would see until then, it would just be overbought, and then finally it hooks. Now I want to know exactly when it is going to hook, okay, because I want to know when to get into the trade. And so what would tell me that is the bar status indicator. So let's just scroll along here, and so we look at this right here. Now see how we've got this would have been a 3B. Now as you know, if we have a deeper pullback, I highly recommend that you consider waiting for the anchor chart 1 candle to close. So that means, yes, we could have entered here on the super scalper. However, because I can see all these green candles, I know that I'd have green candles on the anchor chart 1. So what I want to do is wait for the anchor chart 1 candle to close, which is going to be anywhere about, and there it is, probably about there on the close of the 4th or 5th candle. Okay, so that gives me a potential entry. Note here, we're still fairly oversold. We're starting to pop up a little. So let's just scroll along, look for some other examples. Okay, we come down, thank you very much. Okay, now what do I have here? Nothing at all at this stage. So let's wait for a deeper pullback. Now we're pulling back. Now this is what we call a 200 EMA overshoot. So in fact, let me just do this on the anchor chart 1. That is, I just want to see, is this a 200B? And it is too. Now look at that there, and this is why there's yes, we could put a 600 EMA on our chart. So if we were to put a 600 EMA on our entry chart, that would be very close to this. So in other words, we can see there the 200 EMA is in a downtrend just here. Well, we'd see that we'd see that fairly closely if I was to put a 600. Actually, let me do this. If you're a brand new member watching this, a picture's worth 1,000 words. So if I go to my EMAs, I've got it all automatically set up there. So see that just there. Can you see there, traders, how, and I'm just going to stop this, all these other charts are moving all over the place. There we go. So where was that? Was it just there? Yes. So we can see it just there. We've retraced, we've hit the 200, and you can see, was that the point? Was it back here further? I think that was it. Sorry everyone, I've lost my spot there. Anyway, wherever it was, okay, you can see there we're bouncing. Here it is. All right, I told you these videos are raw, real, and unedited anyway, so I'm not going to bother cutting this out. So you can see here we've retraced, we've hit the anchor chart 1 200 EMA. You can see it just there. Now we actually call that a T12. Now a T12 is a very high probability trade when you're trading in the direction of a trend. Now in days gone by, I would see an overshoot past the 200 on my anchor chart and on my entry chart, and I wouldn't do anything with it. I'd just leave it. What I discovered was they can be a great setup. Okay, and you can see there you had the hook, 7 or 8 steps. Thank you very much. Okay, now just here, what have I got just here? I've got another trade entry. Look on the right there, you can see that I'm bouncing off the 89 EMA. If you look over here, the 30 period hull is black, white is for long, black is for short, and my long-term stochastic is turned red. Now I've got that for Ninja Trader only, and that's one of the zombie indicators. Okay, so you're looking for the zombie indicator. Now what you're really looking at here is the general flow. Like, see where we had that bounce, yet they were against us. So what really took precedent over that is really the bounce off the 200. That was more important than what the 30 period hull was doing. So once again, traders, it will guide you with your trades, but there are some things that will override what's happening on the overlay chart. Okay, now just here I've got a nice little potential short. Now note here, as on the slide I gave you, or we referenced, bouncing off for 200, bouncing off the 89, bouncing off for 200, bouncing off for 200. Now one thing we haven't done for a while, okay, this is important, we need to know where our major support resistance levels are. Just going to pause this and just have some water, just one moment. That's better. Okay, so we know we do have a pivot down below, and the reason that's important is a very good chance that we will trend down and hit that pivot. So let me just close this for now. Okay, so we've got another short. Thank you very much. Okay, so what have we now made here? A new lower low. Guess what I'm expecting up here? And yes, you would have easily got your 8 steps. Now with this, each one of these steps, this is the 5-2, whether it be the 4-2, it does not matter which time frame you're trading. Okay, but in this case I've got the 5-2, we could have the 6-3, it does not matter, but in this case each step is worth $10, so there's $80-$90 in that move. Now lower low certainly looks like we're rolling over, so what do we expect here? And there it is there, another short. Now just there we could wait for the hook or the anchor chart 1 candle to close, or if I've got a very strong trend, and not saying that was in a, and I wasn't in a trade just there, but if it's a very strong trend, I'll jump in using either the rule of 1 or the super scalper. I will get in earlier. Where's that pivot? Okay, so the pivot here would make an ideal target. So let's just do this, and bang. Okay, so we're now oversold with our the long-term stochastic and the 30 period hull. We're about to pull back, and just here that is a 21B. Now just note here we do not have a hook as yet. So if we had the anchor chart 1 candle close green and we're waiting for a red, we do not have that as yet. Also, we're almost on the pivot just here, so we're very close to the pivot. Now I've got a hook just here, so now I've got an entry. So let's just take that, and I can't remember what happened there. Okay, so a big sell-off here, and we must be getting fairly close to the trades I took. I think it's a little bit beyond here. Just here, what have we got just there, traders? That is what we call a $34 be? Same thing though, because we're at that number of reversal candles. You can see there that we had the short-term stochastic actually hooked. So let's just see what happens here. And sorry, it did hook there. I just can't remember where we got in. Okay, now here I'd be looking at there, do I have a divergence trade, by the way, with that sort of move down? And look at this distance here. So we've got a lower low on price, almost guaranteed on the anchor charts we would have had a 2D. So what that means is, usually, as most of you are aware, if we have a 2D, we target the 89 EMA. Now what we'd be looking for here too, we can see the long-term the 2-period RSI is now overbought. To take the next trade, we want to see that hook. Now it actually hooks here, so we would be in a short, probably somewhere about here. Okay, so we'd be in this particular trade. So we take a bit of heat there, and look what we've got here as well. If you're wondering about the arrows, they're turning very quickly. That's actually a two period crossing the 8. Just something I'm looking at the moment. So it's not our normal 8 crossing the 34 over T20. Okay, so nothing spectacular really with that at this stage. But anyway, just here I look at this here, I've got a double top against the 89 EMA, and look what I've got just here. This is what we call a bet the farm. So remember, when you pull back to the 89 EMA and you have a double top, I know that's down by 1 or 2 ticks, same difference, and it's even a T10. So you have a long-term stochastic is now trending down, so you've got a T10. Now this will just be interesting just to point out that, remember how I mentioned earlier, we target, and this wasn't the example I'm going to give you, but we target our swing lows and swing highs. So if we were taking this bet the farm trade, down here at the low would be an ideal spot to target. And what that means is you can increase your target when you've got a low like that. Now what you might do is front run it, so you get out a couple of ticks beforehand. So down we go, thank you very much. Okay, so we shot past that. It would have been a beautiful bet the farm. Now I'm going to do some trades. So in this particular case here, most of you that have seen me in the live trading room, and that is a T10 just there. Okay, so most of you know that what was the point I was going to, I love trading the break of the 89 and buying up to the 200. Okay, now look down here at your at the overlay. The 2-period RSI is up, that's good. The 30-period hull is still down, so is the long-term stochastic at this stage. But then a couple of minutes later, it was actually 1.5 minutes later, I then had the 30-period hull hooked up, so did the long-term stochastic. I'm bobbing or perking my head just up above the 89, and so I decide to roll the dice. Now this is a higher risk trade. Now unlike when you're bouncing off trending EMAs, this is a higher risk trade. Okay, so if you go back to some of the setups we've seen, they were all off trending EMAs. They're the, you know, the 85-90% trades, the 80+% trades. Now this is still probably a good 70% plus, and I really like these, particularly after extended waves in the market. Okay, so what I had was the 2-period RSI was up, the long-term stochastic on my anchor chart was up, and so was the 30-period hull. Okay, so thank you very much. And you can see I got right out at the 200 EMA, and it continued to rally. Okay, so it would have been nice to have got out of there. Now I then jumped in on this, treating it as a T3. Now let me just check that, because 1 2 3 4 5 6, yep, just it was just a T3. A T3 is basically a reversion to the mean trade, and so it was ticking away quite fast at that stage, so it just went by visual look. So I jumped in here as a T3. So T3, once again, is from the low of the highest candle. We have to be a minimum of 7 steps. Okay, so if I was to put a horizontal line and a vertical line, we've got to be 7 of those down, and we were just that. So I took that trade. Where's my stop go? Just above there, and I then took this as a T10 as well. So I added to my position. Now what you can't see here, and you can see here, by the way, that we're now over sold. We got the hook there on the 2-period RSI, and I actually entered this before that actually hooked. Now what was encouraging me to take this was at that time, and if I expand this, I had a deep pullback here, but I was really expecting another push back down to the short side. Now a little bit was experience, and in fact I've got a couple of trades here, and I'll explain perhaps where you might have had better entries. Now this T3 was perfect. Okay, the T10 adding to the position because of the major EMAs was a bit iffy. So here I was in the T3, but see how I've got the 89 and 200 EMA just down below. So this is where they weren't perfect trades, and in fact I decided to stay in them because I was pretty confident we were going to break the 89 and come back down and retest the low. Now let me just show you this here on the recording. Now this doesn't have and it's, sorry if it's bobbing around, because I jumped in here sort of and let me just pause that and just show you this. So I took this T10 just here. So why was that a T10? Long-term stochastic was trending down on the entry chart. You can see there I had a short-term stochastic hook that made that a T10. My stop was 1 tick above that swing high. Look at that there. Okay, so we come back and we tested that right to the tick. Now by the time I got down here, this had already hit 7 steps, and I would have been out. So if you're unaware, I usually target 7 steps, $70 per contract. I was fairly confident we were going to roll over because this is what I was seeing on the anchor chart, so I decided to stay with it. But quite frankly, and I've done this a few times lately, I got down here and started to bounce, and I wish the hell I'd have got out of it, quite frankly. Okay, because we could have taken that as a really nice 2-3B, and we would have picked up some good ticks out of that as well, then formed basically a double top. But I was determined to go for a larger target, but as time went on I was not really happy with my decision. But I will have you notice that the 30-period hull had rolled over, the long-term stochastic had rolled over, I had another hook just here, so they were all telling me to stay short. Now this is where then we fluffed around here, and I'll move this along because and we just fluffed along for ages. Okay, so we're just bouncing around. Whoops. And I was just checking for news because it was so slow. I was really suspicious. Sorry, I didn't mean to actually do it on this screen. I was thinking, why is the market so slow? And we rallied back up again. This is the NQ. Okay, so the NQ is usually really moving well. Okay, so we then rallied back up there. I then come back down, and I typed in that, note the support at the 89 and 200. We then popped back down here, and you may have noticed I'd increased my target because I was looking at the anchor chart. I was making lower highs and lower lows, so it appeared, and I dropped a channel on the anchor chart one, and I thought, well, I'll go for it. Now quite frankly, I should have really exited, got out of these trades, locked in the profit. I could have re-entered on other trades, which you'll see very, very soon, or other potential trades. So that was a good setup, and this was a good setup, quite frankly. Even though you would have been out of there at break even, they were legitimate setups. Okay. Oh, not saying these weren't legitimate, but really that was high risk what I was doing here. Okay, so I then increased my targets, coming over here. Then we had another potential trade here, and I was already short 10, and that's really about my limitation, because I was thinking, oh, do I go short? And I was thinking, no, we're very, very flat right here. Okay, so we're really quite flat, and I'll just move this along, and I had here to retarget the low, and that's what I'm thinking the whole time. Let's go for the low. And so we'd made a whoops, and that was on another chart. So we made a lower low. Okay, it's looking good. I'll just skip this line, and look what happened then. So you can see there that, and let me go back and freeze that for you, that if I had have added to my position again, I would have been stopped. Remembering my stops were up here, and what I actually did, they were up above here, you may remember. I then just dropped them down slightly to this high, just lowering my risk slightly. This then come down, would have stopped me out on if I'd have re-entered here, that is. Okay, so I'm still in this trade. I'm still well and truly in the green, as you can see, but and this is what I was looking at here, was this channel, traders. So I was making lower highs, I was in a downtrend, and I'm looking at coming right back down to this low, at least having, and I don't know if it's probably somewhere beforehand, I actually dropped in a fib level to have a look. We weren't even at the 50% level. Okay, so just kept going, kept going. Okay, kept going. Okay, now we're nearly hitting our target, and I'm thinking, gee, I can't wait to get out of this thing. What's this here? Watching, what am I typing in here? Oh, watching oil paint dry. All right, this is just torturous. And see, look at that there then. It bounced back up again. All right, so I'd left my stop right there, and it was because of the flat major EMAs, because you can tend to rotate backwards and forwards. So this was a trading range. Okay, I was in, then a couple of seconds later we come down, and then I was filled, thank you very much. And so that was a nice at last. Okay, so it was a nice trade. Now what actually happened straight after that is, I'll show you this, is I then had another trade. Now I'd already hit my target, traders. I'd already hit my target, and I was up $1,700. I thought, that's it for the day, I'm happy. And then I had this set up, and what actually happened here, I think this is where I closed it down accidentally. I went to move it or something like that, and I froze it. But as you'll see in a moment, where are we here? Just one moment, I'll pull that back. So we'll see that set up in a moment. So anyway, we'll just scroll along. I'm going to finish this, don't let it go for too long. So here, and this is where we could have taken this 89B, and that would have been a 3B. 1 2 3 4 5 6, we would have probably got a minimum of 5 to 7 steps out of that. I nearly got stopped out from that T1. My stop, of course, was, well, I shouldn't say of course, for traders, I like to have my stop one tick below, one tick above usually. So let me just scroll along here. Okay, so this is sort of really torturous here, and I turned the super scalper on here. Okay, and then we come down. Now this is what then happened. So I was out, and I think I've got here, and I was out there, so I was up 1,700. So here I was after 300 a day per contract, so that's 1,500. So I was well and truly above that. However, what I then set in right here was what? A new lower low. I want you to notice the 30 period hull is down, the long-term stochastic is down, so it's looking good. And then I took this as a 3B. Okay, I thought, beauty. It's only now in 25 minutes, 24 minutes from there was actually going to be the Australian interest rate announcement. So I really didn't want to be in the market at that time, but it was pretty much moving fairly quickly. Okay, then came down, and so as I said here, hit my daily target, but then a 3B, and it was just see how all of our EMAs have broken below the 200. This is what we call a fanning of the EMA. So even if I didn't jump in that one, had another one really potential, really nice potential entry there. Now what I wanted to point out was we then came down to this low, we then pulled back, then you had another 3B just here, and this is 18 minutes past, and you can see the divergence you had there. Now I didn't take this, by the way. I didn't have the super scalper on part of this time. Now I had then another 3B. Remember I spoke about targeting swing lows, so remembering that our pivots way down here still. Okay, so our pivots way down there, but on the way down you can target these lows, and you'll quite often come down and get a bounce like there. You missed it by 4 ticks, and look at that there. You then hit that swing. So on the way down at another 3B, I wasn't just well, obviously you can't see my trade entries, wasn't in that one. You then had a beautiful 3B, then you bounced up, and then there was another 3B, and what you'll see going by the time there, it was no effect at all on the Aussie dollar. Now the point here is, traders, this was much higher risk trading, and I was very lucky I did not get stopped. But one thing I'll have you notice, I didn't move my stop. Okay, that is so many traders I deal with, they keep moving their stops hoping that it wasn't going to stop them out, or hoping that the market will reverse. So just left it there, and so that could have stopped me out, but I was one tick above that swing, which saved me on that one. But the reason I stayed with this, I was sort of making lower highs and lower lows, sort of ticking away. So that's what had me stick with that. And it was quite obvious there on the anchor chart one. Now what I'll have you notice though, and getting back to the overlay chart, your long-term stochastic was trending down, it was oversold. The 30 period hull was down. So what was also supporting these potential trades, and even these couple of trades on the way up, was for long-term stochastic, for short-term stochastic, and the 2 period RSI. And then we had that hook just there. Now there they didn't roll over for some time, but once again on your anchor charts that showed up as a great quality 3B. Now when we've got a major swing like that, that's where we want to consider going for a larger target. So traders, trading the overlay chart is really, it's just more visual on the one chart, but what you're really looking at is over here on the anchor chart one, there's a 30 period hull. If you look where that turns there, it turns at exactly the same time on the overlay chart. We've got there, if I put that just here, the short-term stochastic hooks, exactly the same time as the 2 period RSI hooks. So it's just having all of this on the one chart. But one thing that I'm missing, and you can't see just here, is and you can't have on there, or maybe you could, but I haven't tried to put it on, is the bar status indicator. And the reason that's still important for me, if I do want to wait for this to hook, I like to put in a sell stop order rather than using a market order. Okay, so here I can tell by the bar status indicator when that candle's going to hook. Now if you don't have NinjaTrader 8, you can soon you'll discover that when you do a count, you'll find there, like in this particular, let me go to that one just here. How many was that down? That was there 1 2 3 4 5 at the low of the sixth candle. You'd simply just go, as you saw that setting up, you count down 6, take the low of that, and you can put a sell stop order at the low of the sixth candle, and you'll find that's basically consistent then on every rule of one. Like on this one just here, let me just do this here. Look, I won't bother doing it. I think you get the general idea. Anyway, traders, this is trading the overlay chart. So stick with the trend. As you gain experience, you may choose to do the CT trades, but what I love about I just like being able to see it on the one chart. Okay, traders, and by the way, before you email and ask me, I don't always use the overlay chart. Okay, sometimes I like to look at it and use it, so it just really comes down to personal preferences. Okay, traders, hope you got some ideas out of this. I'll see you in the next video.